What is happening, crypto champions? Get ready to ignite your trading sessions because the market is absolutely electric right now, and we've got the pulse-pounding updates you need to stay ahead. The pace is relentless, the moves are massive, and if you're not plugged in, you're missing out on the action. We're diving deep into the volatile currents of the digital asset world, bringing you the critical intel that could shape your next big play. From price point battles to strategic shifts, this is your front row seat to the revolution. Buckle up, because we're about to break down the stories that are dominating the headlines and defining the future of finance. Let's go. First up, is Bitcoin staging a strategic comeback, or is this a sign of deeper troubles? We're scrutinizing that crucial $105,000 support level and asking if the current weakness presents a golden opportunity for savvy investors. Is it time to buy the dip, or should you be bracing for more turbulence? We've got the analysis that cuts through the noise. Then, we're tracking the massive price movements as Bitcoin retreats from its recent peaks. What's causing this pullback, and what does it mean for the broader market? We'll break down the analyst insights and the underlying market mechanics driving these shifts, giving you the clarity you need to navigate these choppy waters. And the future, analysts are painting a bold picture, projecting Bitcoin's trajectory towards an astonishing $126,000 by 2025. We'll explore the institutional adoption, the evolving role of crypto payroll, and the factors fueling this aggressive forecast. Plus, we're looking at the wider economic cracks appearing globally and how they're impacting Bitcoin's path, potentially towards that $100,000 mark. Don't miss these essential updates. Hit that like button, subscribe for more, and ring the notification bell so you never miss a beat. Bitcoin's critical $105K support, a strategic buying opportunity amid short-term weakness. Could Bitcoin be testing a crucial psychological and technical barrier? As prices flirt with the significant $105,000 support level, the market is buzzing with speculation about whether this represents a strategic buying opportunity or a precursor to further downside. This pivotal moment comes amidst a backdrop of short-term weakness, prompting a deep dive into the factors influencing Bitcoin's current trajectory and its potential for a rebound. The digital asset has experienced fluctuations, leading many to question the sustainability of recent gains and the resilience of key support levels. Analysts are closely monitoring the $105,000 mark, a level that has historically acted as a significant floor for the cryptocurrency. A breach of this level could signal a shift in market sentiment, while holding it might indicate underlying strength and a potential springboard for future rallies. The interplay between short-term price action and the broader market sentiment is critical in determining Bitcoin's next move. Several factors are contributing to the current market dynamics. Profit-taking after a period of strong performance is a natural market cycle, but the extent and duration of this consolidation are key indicators. Furthermore, broader macroeconomic conditions, including interest rate policies and global economic stability, continue to play a significant role in investor risk appetite. The correlation between traditional financial markets and the cryptocurrency space means that any tremors in the global economy are likely to be felt by digital assets. Investors are weighing the potential for Bitcoin to act as a store of value against its inherent volatility. The ongoing debate about Bitcoin's role in a diversified portfolio intensifies during these periods of price discovery. As institutions continue to explore and adopt digital assets, their actions can significantly influence market sentiment and price action. The success or failure of Bitcoin to hold its key support levels will be closely watched by both retail and institutional players alike. Market observers are dissecting on-chain data, trading volumes, and futures market activity to gauge the sentiment of large holders, often referred to as whales. Their movements can provide valuable insights into the market's underlying health. Additionally, the performance of Bitcoin relative to other major assets, including gold and traditional equities, is being scrutinized to understand its positioning within the broader financial landscape. The narrative around Bitcoin as a digital gold or a growth asset is constantly being tested by its price action. This period of consolidation presents both challenges and opportunities. For long-term holders, dips can be seen as accumulation phases, while short-term traders will be looking for clear signals of trend reversal. The upcoming weeks will be crucial in determining whether Bitcoin can overcome its current headwinds and reassert its upward momentum, or if further corrections are on the horizon. The resilience shown at the $105,000 support level will be a key determinant of the immediate future. Hold on tight because the market is far from settled. Next, we'll unpack the latest price action as Bitcoin pulls back from its highs and explore what's driving these significant market shifts. Bitcoin prices have retreated below $108,000 after peaking mid-month. Bitcoin's stellar ascent has encountered a significant pause, with prices retreating below the $108,000 mark after reaching an all-time high above $124,000 earlier this month. This pullback, representing a decline of over 13% from its peak, has sparked a flurry of analysis regarding the underlying causes and potential implications for the cryptocurrency market. Analysts largely attribute this correction to natural market cycles, profit-taking, and the inherent volatility of a 24/7 trading environment. Mike Cahill, CEO of Doro Labs, described the retreat as an inevitable consolidation phase following an extended rally to new all-time highs. He emphasized that markets rarely move in straight lines, and a 10–15% pullback in Bitcoin is well within the norms for such a volatile asset class. Doug Colkett, a founding contributor at Fogo, further elaborated on this, stating that after reaching $124,000, the market saw a surge in leveraged long positions chasing momentum. When funding costs become elevated, the market becomes susceptible to gravity, leading to a flush-out of these positions. He clarified that the decline is not due to a mysterious macro event, but rather basic market mechanics. Funds taking profits, crowded derivatives markets, and retail investors entering the market late. Cahill also pointed to several contributing factors, including profit-taking by long-positioned funds, elevated funding rates in derivatives markets, and thinner liquidity conditions typical of August trading. These dynamics, when combined, can accelerate price declines. Joe DiPasquale, CEO of BitBull Capital, echoed these sentiments, highlighting profit-taking after a rapid run-up, lingering macroeconomic uncertainty, and shifting flows as key drivers. He noted that traders locked in gains above $124,000, while recent dollar strength and higher bond yields dampened risk appetite. Additionally, a cooling of ETF inflows after a fast pace in early August removed a key near-term tailwind, pushing BTC back into consolidation mode. Adding another layer to the analysis, some market observers suggest a rotation of capital out of Bitcoin and into less prominent digital currencies. Greg Magadini, director of derivatives for Amber Data, observed an active rebalancing of funds out of BTC and into ETH, driven by Ethereum's potential as a Web3 tech play and the market's perceived underinvestment in it. He cited the potential for staking rewards to be enabled for ETH holders by October, which could lead to increased ETF inflows, and corporate treasuries beginning to incorporate ETH allocations alongside BTC, all contributing to a temporary shift in enthusiasm away from Bitcoin. Tom Bruni, editor-in-chief at StockTwits, noted a broader rotation from megacap winners to smaller-cap catch-up plays across both equities and crypto, which has led to a decrease in Bitcoin's dominance. He pointed out that Ethereum, Ripple, and other altcoins have encountered resistance near their 2021 highs. Bruni also highlighted September's seasonal weakness for risk assets and the stalling momentum for Bitcoin bulls without a clear catalyst. He indicated that the StockTwits community is watching the $100,000 level for Bitcoin, where the 200-day moving average and a prior breakout level converge, as the next significant support. While Bitcoin navigates these short-term corrections, a much bolder future is being envisioned. Prepare yourself for the incredible projections as we explore Bitcoin's potential path to $126,000 and its evolving role in global finance. Bitcoin's path to 126K, navigating the future of crypto payroll. Get ready for a seismic shift in the financial landscape, as Bitcoin is not only back in the spotlight, but is being projected by analysts to skyrocket to an astonishing $126,000 by 2025. This isn't mere speculation. It's a forecast rooted in the growing institutional adoption of Bitcoin as a strategic reserve asset and its increasing integration into everyday financial activities, such as crypto payroll. J.P. Morgan's analysis, led by Nikolaos Panagurtsoglou, highlights a significant development. The BTC Gold ratio's volatility is at an all-time low of 2, suggesting Bitcoin is potentially undervalued and could indeed reach the $126K mark. The surge in institutional adoption, significantly amplified by the launch and performance of crypto ETFs, is a primary catalyst for this bullish outlook. These ETFs have not only made Bitcoin more accessible to a wider range of investors, but have also lent it greater legitimacy within traditional asset circles. As more large players enter the market, the increased demand and trading volume contribute to greater price stability, transforming Bitcoin from a niche digital curiosity into a serious contender in the global asset market. This institutional embrace is a powerful signal that Bitcoin is maturing as an asset class. To navigate the inherent volatility that still characterizes the cryptocurrency market, various strategies are proving effective. Long-term holding, commonly known as hodling, coupled with dollar-cost averaging and strategic diversification across different assets, can help investors weather the inevitable price swings. Incorporating Bitcoin into a well-rounded investment strategy is key to potentially capitalizing on its long-term growth potential while mitigating short-term risks. However, the path to $126,000 is not without its obstacles. Regulatory uncertainty remains a significant headwind, with governments worldwide still grappling to establish clear frameworks for cryptocurrencies. The increasing costs associated with compliance, particularly for anti-money laundering, AML, and Know Your Customer, KYC regulations, pose challenges, especially for smaller, innovative crypto firms. The lack of standardized classification for digital assets also creates ambiguity, potentially impacting market liquidity and investor confidence. The substantial inflow of approximately $2.5 billion into cryptocurrency ETFs, projected for August 2025, alone underscores the immense institutional interest. Historically, when major financial institutions increase their exposure to an asset, its volatility tends to decrease, and its acceptance within mainstream finance grows. Bitcoin is increasingly being viewed not just as a speculative investment, but as a fundamental component of future financial strategies, akin to gold. Furthermore, Bitcoin's utility is expanding beyond just a store of value or speculative asset, with its potential as a payment platform gaining traction. The emergence of crypto payroll services, allowing companies to pay employees in Bitcoin, is a prime example of this evolution. This not only promotes greater financial inclusion by offering alternative payment methods, but also integrates cryptocurrencies more deeply into the fabric of everyday economic transactions. This shift signals a move towards practical, real-world applications that could drive further adoption and demand. While the future looks bright with ambitious price targets, the present market is grappling with broader economic headwinds. Next, we'll delve into how widening economic cracks in the US and China are creating turbulence and pushing Bitcoin towards a critical $100,000 level. Bitcoin news today. Investor caution drives Bitcoin toward $100K as US and China economic cracks widen. Investor caution is the prevailing sentiment as Bitcoin edges closer to the $100,000 mark, a trajectory influenced by widening economic fissures in the US and China. These global macroeconomic concerns have triggered market turbulence, leading to significant liquidations of leveraged positions and a noticeable pullback in Bitcoin's price, which has fallen to a 50-day low below $108,000. This period of uncertainty saw $137 million in leveraged bullish positions liquidated, underscoring the fragile market sentiment. The U.S. trade deficit widened dramatically by 22% in July, reaching $103.6 billion, exceeding economist expectations and signaling a potential drag on third-quarter economic growth. This macroeconomic weakness has directly impacted Bitcoin's price, as traders reduce exposure amid the growing concerns and ahead of a U.S. national holiday. Compounding these issues, major insider stock sales and a significant increase in delinquencies within China's largest banks have further amplified alarms. Specifically, the 5 largest Chinese retail banks reported record-low profit margins and an 8-fold increase in the sale of bad debt in the first quarter compared to the previous year, painting a grim picture of financial instability in the region. Adding to the downward pressure on Bitcoin, large holders, often referred to as whales, have been selling their holdings, and miners have been consistently moving coins out of their reserves, exacerbating price corrections. Despite these outflows, analysts maintain that the primary driver of Bitcoin's decline remains the overarching macroeconomic uncertainty rather than specific crypto market events. However, institutional demand for Bitcoin remains a bright spot, with Bitcoin spot ETFs recording a substantial net inflow of $567.35 million during the past week. This inflow reverses a previous week's outflow and indicates that institutional and corporate buyers are actively increasing their Bitcoin holdings even amidst recent price dips. The artificial intelligence sector has also been a source of market jitters, indirectly affecting investor sentiment towards risk assets like Bitcoin. NVIDIA, a leading AI chip manufacturer, experienced a 1.3% stock drop despite reporting record profits of $46 billion in its second quarter. Concerns were heightened by the disclosure that 44% of its data center revenue stems from just 2 major clients, raising questions about over-reliance. Adding to the unease, Super Microcomputer, a key supplier of AI infrastructure to NVIDIA, issued a warning regarding financial reporting weaknesses, causing its stock to decline by 5.1%. These events in the AI sector have amplified broader market risks and contributed to investor caution. On-chain activity for Bitcoin reflects this cautious market sentiment. Reports indicate that spot demand has remained neutral, while the perpetual futures market has shown a bearish, albeit fragile, bias. The 30-day moving average of cumulative volume delta, CVD, on major exchanges has converged toward zero, signaling a neutralization of buying pressure. Simultaneously, the futures market has displayed an increasing sell bias, with CVD declining into negative territory since July. This data suggests a market that is hesitant to commit to strong directional moves, waiting for clearer economic signals. The macroeconomic environment continues to dictate investor behavior, with U.S. Treasury yields falling as investors flock to safer assets. The 2-year Treasury yield dropped to a 4-month low of 3.62%, reflecting a growing preference for risk-free investments despite persistent inflation concerns. Looking ahead, the Federal Reserve's policy decisions in September are highly anticipated, as any potential interest rate cuts could significantly influence the trajectory of risk-on assets like Bitcoin. Historically, September has been a weak month for risk assets, but a Fed rate cut could provide a catalyst for recovery, especially if coupled with continued institutional demand. These economic headwinds are creating a complex landscape for digital assets. But what does all this mean for your portfolio? We'll wrap it all up with a quick recap and a look at what's next. All right, crypto enthusiasts, that's a wrap on another action-packed update. We saw Bitcoin test crucial support levels, analyzed the pullback from recent highs, explored ambitious projections towards $126,000, and examined the impact of global economic cracks pushing towards $100,000. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and turn on notifications so you never miss a beat. Connect with us on all our social platforms to join the conversation and stay ahead of the curve. We'll see you in the next one.